Sometimes boring can be better, and I'm going to tell you how I made thousands of dollars from this seemingly boring covered call ETF. Hey guys, it's Paul here from my channel, Better Call Paul. Today, we're going to do day 16 of my 30-day challenge in November of doing 30 ETFs in 30 days. So today's ETF is not an exciting tech stock. It's nothing like Alti. It doesn't get a lot of attention. In fact, I think I might be the only person talking about it. Well, except for one, my good friend Adriano at Passive Income Investing. So I'm going to go over this ETF that I've held since it came out in October of 2023. And I've shared posts on Blossom many times explaining how I've made money from this ETF, even though it always seems to be in the red. So, guys, let's take a look at which ETF that I'm talking about today. All right, here we are, guys. It's Global X Enhanced Canadian Oil and Gas Equity Covered Call ETF, ENCL. So right now, the annualized distribution is 16.75%. All right, you can see the current price is $18.97. Has a risk rating of high. So reasons to consider ENCL: magnified growth potential. Unlock the growth potential of Canadian oil and gas companies with ENCL, which uses light leverage up to 125% to enhance growth potential and yield. All right, guys, high income potential. ENCL provides access to covered call strategies designed to potentially enhance portfolio income while reducing portfolio volatility. And of course, monthly distributions designed to provide consistent monthly income along with potential long-term capital growth. Let's see if there's any information here we need to know. You can see that the current net assets are $255 million, which are pretty good for a Canadian listed ETF. Management fee is 85 basis points. Management expense ratio is 1.86. Average coverage, 40%, probably with a max of up to 50%. They even list the average moneyness here, 2.56%. Average option annualized yield, 14.84%. Dividend yield, 5.40%. Indicative yield, 20.84%. All right, guys, here's the growth of 10K. Had you invested in when it first came out in 2023, it would currently be worth $13,000. The annualized return since inception, it says 13.56%. All right, you can see here, guys, the distributions. It was at 26.5, dropped down to 25.5, and then back up to 26. I think at one point in time, it was actually 29 cents, if I recall. So the top holdings, guys, the top holdings is ENCC. So ENCL is the leverage version and ENCC is what it holds. So if we take a look quickly, you can see that ENCC holds Cenovus, Imperial Oil, Meg Energy, Suncor, TC Energy, Canadian Natural Resources, Tourmaline, Whitecap, and Enbridge. All right, guys, I'm going to quickly go into my Wealthsimple account because sometimes when I show spreadsheets, people accuse me of not showing real information as if I'm lying about my investments. So let's take a quick look in Wealthsimple. All right, here we are in my Wealthsimple account, guys. You can see that about a week or two ago, I was up around 109%. Right now, it's up 91% because the last month has been pretty bad. But let's go down to my TFSA. And we can go into my ENCL position. You can see right now that I'm negative $542. So you can see that I do own 1,270 shares. But what I really wanted to show you guys was in the activity section. If you go into activity, you can click on type. You can look up dividends. You can go down to holdings. And you can specifically select ENCL. I don't know why there's two of them, but there is. And then basically, guys, what I do is I sit down, I open up a spreadsheet, and I just track all of the distributions. So you can see this was back in November 2023 was the first month of distributions, right? I was getting paid. At one point, I had ENCL in 3 different accounts. I just want to show you here quickly. At one point, I was making $881 just in my tax-free savings account. This is when ENCL was the largest position that I had. Anyways, you can see that I continue to have distributions all the way up until November. Now, if you hide that and you put in cells, you can see all the times that I sold ENCL. And if you click on them, I love this now, this is fairly new. If you click on one of them, it actually, okay, on your mobile, on your cell phone, it shows whether or not you made a profit. I don't know why it doesn't show it here. It doesn't make any sense. But let's take a quick look. I decided to put this together for all of you. ENCL, right? We know it's the Global Enhanced Canadian Oil and Gas Equity Covered Call, ETF, with the inception date of October 10th, 2023. So the current price is $18.98. I have 1,270 shares. My average price is $19.42. So my book cost is $24,663, which means I have an unrealized loss of $558. My yield on cost right now is 16%, which I think is really good. But a lot of people will look at this and assume that I'm losing money, right? For example, my wife, she'll look at this and she'll say, why would you buy this fund? You're losing money. But what you have to do is you have to go down to your dividends, right? And I added up all my distributions for 2023, 2024, and 2025. And you can see that it actually paid me over $10,000. And then furthermore, I went and I looked at all of the times that I sold it and how much money I made or how much money I lost selling. And that was a total of $35.65. So if you add the two of them together, this ETF has paid me $13,740. All right, guys. Now, just before we go, if you don't follow Adriano on passive income investing, he did battle, I believe, yesterday, filmed it back in October, but he aired it yesterday, and it showed all the different oil and gas pipeline ETFs in Canada and which one he considered to be the best. So I'm going to show you just a 25-second clip, what he had to say about ENCL.
ENCL as the highest yield out of all of them, even higher than oily, I believe. It's at right now 17.32%. There could be fluctuations, like you see that it was at 26.5, then it went to 25.5, now it's at 26. But ENCL, seems to be the winner in terms of total return, and also seems to be the winner in yield as well.
All right, guys. So there you have it from Adriano himself. He did the comparison of about 5 or 6 different ETFs, and ENCL came out on top in terms of total return and highest distribution yield, highest dividend yield. So, guys, don't just buy your tech stocks. I read people posting on Blossom saying that they own MSTE. It's crashing. They don't know what to do. Should they sell? They're panicking. And I'm not panicking, right? I'm not worried at all because MSTE is one of about 40 positions that I have. And I know it's going to continue to pay even if the distribution goes down. So make sure you are holding ETFs from different sectors, different indexes, different risk volatility, right? And your comfortability, right? If you're worried about losing the money, don't put it in something like MSTE, right? If you can't stomach the volatility, then put it into something safer, something that doesn't go up and down as much. And you'll notice right now that ENCL is up today. Utes is up today. They're maintaining their share price. So this is why recently I've been saying that I'm putting more money into Canny, HHIC, Utes, ENCL, for example. All right, guys. So make sure your portfolio is balanced, well balanced, and don't take on more risk than you can stomach. All right, guys. Today is Sunday, so enjoy the rest of your weekend. And until tomorrow, bye for now.